Well, it's all everybody seems to be talking about. The hype surrounding the markets is inescapable, and for some, overwhelming. But to what extent does this really affect you in your everyday life? Why does the credit rating really matter? Mike Rogers, president of 360 Financial, was with us just last night and joins us now again tonight to help put some things into perspective. Yeah, good luck on that, Mike. That being said, we all know now the stock market closed down about 600 points today. There were some analysts, though, who were saying it could be as bad as 1,000 points down, and others saying it really wouldn't have much effect at all. So what are we supposed to think at home with our investments, our families, and our money?
Okay. You know, from the standpoint as far as looking at it from your own family, your own money, take a step back and say, what does this really mean? And what I've been telling people is, if you look at a consumer, and a consumer has a credit score, everybody nowadays has different credit scores.
Yep.
The U.S. government debt credit score has been lowered. Okay, so the concern is if you're a consumer and you have a lower credit score, you're going to have to pay more for your mortgage, you're going to have to pay more for a car loan, the cost of borrowing goes up.
Yeah, great analogy.
Yeah. So the concern is the same thing with the U.S. government. Cost of borrowing goes up to the government, and therefore they have to charge higher interest rates or pay higher interest rates for people to buy their bonds, which becomes more costly to be in a deficit and to be in a debt mode like we are in this country now.
Yeah, no question. So we have the S&P downgrade. The others, there might even be talk of a lower downgrade, once again, not only with S&P, but the other two, Fitch and Moody's, could actually reconsider their decision on not downgrading. I mean, it seems like nothing but turmoil as far as the eye can see.
Well, you know, there is turmoil. You are right, S&P and Moody's. Moody's and Fitch last week said that they were going to reiterate their AAA rating. So we do have one agency, this is S&P, that has come on out and said, you know, we're going to downgrade the rating from AAA to double B plus.
Right.
Okay, so what does that really mean?
Yeah, I don't think people at home right now are saying, what? I got A's and I got B's and C's in school. I have no idea what that means.
Yeah, and really from the standpoint, I don't think it means a lot. The concern that the market has right now is that interest rates would be going up because government rates would have to go up in order to bring in more investors, more buyers of our bonds.
Gotcha.
What's interesting is today, the opposite happened. What ended up happening today was rates actually went down.
Yeah.
And they went down because people were selling stocks, moving that money over into bonds, or maybe gold, because gold had a big spike up in rates or in prices, and they were moving it over into what are considered more safe investments, which are still those bonds.
Yes, and we hear that time and time again. So again, if I'm at home watching this right now, is this another one of those times that I hear financial guys like you say, don't panic, relax, ride it out, don't make any big changes in a volatile market like this?
Well, generally, financial guys like us probably would say that. You know, what I think really people need to do is again, look at what their goals are. What's their strategy? How long are they having to invest? If you had all your money in the stock market and you're going to retire next year, that's not a good diversified strategy. But there are people that are doing that. Unfortunately, there's also retirees who are sitting with all their money at the bank, earning no interest, spending all their principal to keep up with the cost of living. That's a whole other topic altogether.
Yes, it is.
But, you know, people need to make sure that they have a good strategy going forward. That does mean diversification. I know sometimes the story gets old, but diversification, different asset categories, know your time horizon that you're going to invest for, and stick with it.
Yeah, very, very quickly, Mike, why now a downgrade? I mean, we went through World War I, World War II, the Depression, never before a downgrade like this.
Well, I think what ended up happening is a couple things. First of all, the S&P said they looked at the political process, or lack of political process, and said there's some concern here. We were looking for $4 trillion of some sort of spending cuts. We only got 2.7. We're going to do it. You know, to be honest and to be very frank, I think S&P is trying to build credibility. You know, they were woefully behind when it came to the 2008 credit crisis, and I think now they're out there saying, okay, you know, we've got to build some and establish credibility, and we're going to do it in a big way.
Yeah. All right. Wow. Very interesting, and at the expense of potentially a lot of people.
Yes.
Mike Rogers, sure do appreciate you being here again tonight. Thank you.
You're welcome, Heidi. Thank you.